And by the way, from now on, you can actually choose between two stages. This living room is the innovation stage. But when you look on the dashboard, you will see that there's also the transformation stage. And from now on, there's a parallel program running there. So you can choose. And there are also interactive sessions, not all the time, but you can check and obviously join them if you fancy doing so. If you stay here with us on the innovation stage, then we now come to the first fireside chat. And no, it's not me quizzing Kevin here. Kevin, of course, Kevin Hackel from Digital Banking and Financial Services at Bitkom. But Kevin is actually the host. Kevin, how do you feel when you look there? It's a nice little sort of environment, right?
Well, it's great. I'm happy to finally have made it to our digital living room. I think it just looks nice. And yeah, maybe just take an opportunity to say hello to everyone.
Absolutely.
In front of our screens today.
Absolutely. What's this fireside chat about that you're doing now?
Well, we're gonna start on one very interesting topic. I think it's called embedded finance. It's quite new. It pops up here and there lately in the FinTech news. And as you know, and probably our viewers at home know, we at Bitkom really try to drive our ecosystem, meaning that we want to work for the traditional banks, but also for FinTechs, third-party providers along the value chain. And I think embedded finance can really be some part of missing piece maybe we were looking for the last couple of years. Yeah, and I'm happy to dive a bit deeper.
And take it away, Kevin. It's all yours.
Yeah, perfect. Well, on that occasion, as I said, embedded finance is quite new, but I think it's very important that we talk about it. But of course, it's important that I'm not doing this on my own. So I'm very pleased and happy to welcome two experts to our virtual stage today. One of them is Miriam Wohlfahrt. Miriam really needs an introduction. She's probably the face of the German FinTech ecosystem. And today she will speak in her capacity of a new venture she founded not so long ago, Banksware. Miriam, I'm very happy to have you here today. Hi.
Hi, Kevin. Thanks a lot for the invitation. I'm glad to be here.
Awesome, thanks. And next to Miriam, we have Alex. Alex is actually joining us from the UK, so I think it's really great to get something out of the digital environment. So we have the opportunity to actually widen the scope of our speakers. Alex is a serial entrepreneur in the field of payments, and with his latest venture, he embarked on a new journey in the field of embedded finance, embedded banking, offering a platform and with it solutions to different players in our FinTech ecosystem. Alex, very happy to have you on board today.
Great, really, really happy to be here.
Great. So maybe I just indicated it. Embedded finance is quite new. It's becoming a bit buzzy. We'll read it here and there. So maybe I think to kick this off, our fireside chat, maybe we should start with a short definition. So what actually is embedded finance? Maybe briefly touch upon this. And what do you think is the potential for us, for our finance ecosystem? Maybe Miriam, you want to kick off and Alex will just join.
Okay, I think a very easy explanation is integrating financial service into companies that are no banks and integrating it into the product offering of these companies. Like platforms can offer an integrated solution in order to offer a banking product, and banking product can be a payments product, a borrowing product, an investment product. So everything that is actually related to what is banking. Banking is all these actions that you usually do at a bank, but you can do them now not at the bank, you do them at the platform or the marketplace or the other company. That's for me embedded financial services.
So bringing banking.
I would add that, when we think about financial services, no one buys financial services because they like financial services, right? We don't like to own financial services. We buy them because there is something else that they help us do. Sometimes that's things like safety. Maybe we're buying insurance or we're buying a pension. Sometimes it has to do with being able to afford something that we couldn't buy at once. That's why we get mortgages to buy houses, or we get loans to buy cars. Sometimes it just makes life flow better. You know, we don't have to carry suitcases of cash when we go on holiday. So financial services by their nature, they help us do other things. So isn't it obvious that we should be consuming financial services with all the other digital products that help us do those things? So when I look to buy a new house, why shouldn't I also be able to find the mortgage at the same time as I'm browsing the houses? Why shouldn't I, when I am going on holiday, have all the financial services I use on holiday, insurance, foreign exchange, maybe a way to pay for the holiday in installments, you know, as part of that experience of choosing and buying my holiday. So there's something super, you know, really natural about embedding financial services. It's almost strange that financial services have developed in their own little ivory tower, and we have to go to that ivory tower to buy the financial services that we think we need.
Yes.
Embedded finance is changing this.
So actually, in a nutshell, we could say like bringing financial services where they are actually needed to the customer, not let the customer come to the bank or whatever entity just to get done what they need to fulfill one of their needs. I think this is really interesting, and also I think underlines how important banking and our finance ecosystem is for us in general, because it is integrated in so many of our lifestyle choices. So maybe to dig a bit deeper, and also maybe to reflect on business cases you helped developing or are currently developing, just to make it a bit more tangible, could you give a few more examples you are currently working on? I think this would be interesting for our viewers.
Should I start? Okay. So what we are currently working on at Banksware, for example, we just launched, actually last week, we launched a product. We call it Get Raoul. It's a fantasy name, actually. It is a joint product between takeaway.com in Germany called Lieferando and us and Banksware. So actually we enabled Lieferando to offer loans, financing, revenue-based financing to their restaurants. And this is especially interesting now in the, let's say, post-Corona times, where a lot of restaurants, you saw a lot of restaurants growing now during Corona, because they really established the delivery services, and they need some, let's say, money in order to move on faster. And so together with Lieferando, we developed it that they are using our service as a white label service to integrate it into this new brand called Get Raoul. And Get Raoul is, let's say, the new financing stuff for Lieferando merchants, which is really convenient for them. And I think this is about, I mean, the more we think about customers, the more we see the Amazonized customers, yeah, because they are looking for convenience. They want to have, let's say, things where they are most relevant. And for a typical Lieferando or takeaway.com restaurant, the platform is the most relevant place in their daily lives, and therefore it makes sense that, you know, when the platform sees this restaurant is making good, I mean, it's growing good, it's a young restaurant, and they need money in order to, let's say, buy a new coffee machine and grow faster, make more revenues, they can get immediate cash. And so this is actually what we do. This is one case, what we are actually working on. I mean, but you see many, many other cases. So for example, Tesla, when you buy a Tesla, you can automatically click on, yes, I want the insurance. So this is so super convenient, and this is there where the customer is, where it is most relevant in this situation. And so I think this is the biggest example is Alipay. Within Alipay, you have everything that is related to a financial transaction for a merchant. So there are lots of use cases already.
Okay.
Maybe I'll share one that's a little bit odd, but I think it just shows the amount of creativity you can have with embedded finance. So we're working with a company that has devices for detecting, you know, movement, blood oxygen, calories burnt. And this device is also equipped with an NFC chip. And what they're creating a financial model within the device where individuals can set competitions against each other. Who burns most calories in a month? And they, it's like a sweepstakes. Everybody puts their stake, and then whoever in the social group, burns most calories will basically take the winnings right from them. They also have corporate sponsorships where corporates can set prizes so that people can be motivated, obviously interact with the brand. And one of the fundamental components of this is the ability for money to flow and for them to be able to use this money in everyday activity, like going on public transport, like buying their newspaper. So that sort of contactless chip in the device, along with all the smart data that they have around that device, creates this sort of model where they're really sort of motivating people to think about their movement and their energy and their well-being. So I think that's quite a, it's quite an odd example, but just to kind of, show how wide and full of potential embedded finance is.
Yeah, I think this is really interesting, and I would be also interested in this stage. I mean, you named a few examples, be it from the mobility sector, be it from financing your own venture. We had heard something about health. Do you think there is a specific industry that embedded finance should be tackling because it solves problems that aren't solved at this moment, or is it really under quotation mark just more convenient? Or will we also see that certain gaps of certain groups that may not have access to money or something? What do you think is above convenience, so to say? Maybe.
I'm happy to kick this off. I think there are two drivers for customers for embedded finance, and convenience is certainly one of them, right? The ability to have the financial service the moment you need it. But there is also another thing about financial services. There is the anxiety that you're buying the wrong service. You're buying the insurance product that doesn't quite cover you for what you want. You're buying an investment product that doesn't really, reflect what your objectives are. And I think this is the huge value add because digital applications, they are far more rich context. If you want to buy the house, you know exactly which house you're going to buy. So you can get exactly the right mortgage for that house. And and that rich data can be used to actually create the certainty that that's the right product for you. This happens when you go to buy a car and you get car finance, right? The dealer is already choosing that finance product to make sure it's actually a good fit with that asset class of buying basically, a car. So I think this is the big opportunity for value add. Convenience, certainly a big driver, but an even bigger driver is the certainty that this is a good fit financial service for the overall product or service that you're buying.
Yeah,
maybe.
I think it's the creation of a, let's say, data that you can receive from the one hand, and then also financial technology from the other hand, so you can create something new. And if I look at, we get a lot of data points from the companies that we work with, for example, and when we talk about lending, this makes us, this brings us into the situation that we can offer products that banks are not able to offer because they don't see, let's say, the transactions of the restaurant, or they don't see what's happening in this e-commerce marketplace, how much this company is selling, because this enables, let's say, new models of let's say, credit risk appetite in order to give somebody, for example, a loan. Because when you look at a standard bank that gives out loans, they have standard processes in how they access the credit risk, and they do more or less standard things. They check, maybe they check bank accounts, but most of the time they just do very basic things, and they can really not dive into the data. And I think this is now the combination of the technology enables the data from the platform plus the banking, let's say, services, that you can really create new products out of this. And this is just, I think we are there at the beginning at the moment. We will probably see many more things in the future.
So Miriam, maybe as a follow-up question, everyone would describe probably him or herself or his or her business as customer-centric. So now we are starting this journey, as you just put it. We are at the beginning of something. Why do you think the last couple of years this field wasn't taken by existing players such as banks, where you would normally go to for a loan? So what do you think? Why now? So for instance, why are not doing it banks?
I think banks are just sometimes too big and too slow, in order to build cool technology. And if you really look at I think you need companies that have tech in their DNA, that are able to really build things and get things going. And this is not what banks are good in. And a couple of years ago, it was not able to access this data. And now, let's say, through new regulations with PSD2, etc., and open banking, you have the possibility to also access data that were not there before that. And now, actually, I think through the rise, that you have open banking as a kind of, let's say, enabler for new business models. And when you let's say use the open banking and combine it with modern technology, and also if you look at machine learning examples, for example, in the past, I mean, a couple of years ago, if you go back like, I don't know, 9 years, it was super expensive to do that. And now it's much better and easier to build up machine learning, and you can build up new systems from the scratch. So this is, I think there are new possibilities there now. And banks, I don't see the banks there, to be honest. I see banks in let's say they going into changing their roles a bit.
I think that's very interesting. So if we maybe zoom out a bit and have a look again at our finance ecosystem as it is, maybe Alex, what is your view? I mean, we have traditional players such as banks who are providing a certain service at which they are very good at. Then we have these innovative tech companies who might be adding something. So overall, in terms also of who is driving innovation or who will lead the market, I don't know, in 5, 6 to 7 years, will it lead to more cooperation among those players, or will we see rather, I don't know, more fragmentation or just a shift of leaders within the finance ecosystem? What is your view on this?
Sure. First of all, I would say that banks will find that they cannot afford not to be involved in embedded finance. And the reason is because the customer value proposition is so strong that banks just will have to start offering services in that way. And make no mistake, this is a major shift, right? So if you think about banks moving away from the branch into digital channels, they were moving into digital channels that they controlled, and they were effectively selling digitized versions of the product they already sell, right? With embedded finance, there are two big changes. One, there are going to be new financial products that are much more slimmed down and much more specific, like laser focused. And secondly, the bank no longer has end-to-end control over the user experience. They don't have end-to-end control over how the product is sold, how it's consumed, how they do oversight over the product. So this is a really challenging piece. I would say there is actually a structural gap in the market in the ability to execute on embedded finance. We talk about APIs, we talk about open banking, and that's actually a good starting point. But the real big challenge that we all the pioneers of embedded finance face is how do you deal with compliance, security, transaction monitoring? Who does that, right? The bank cannot do it because they don't have the full context. The company, the brand that's actually selling the full product, including the embedded finance, don't know how to do it, right? Because they are not experts in compliance and security and fraud risk monitoring. So who's doing that? And actually, this is the big battleground with embedded finance. Once that battleground is solved, and it's largely going to be a technology solution, like Miriam was saying, things like machine learning, things like technology that is able to do a much more contextual way of dealing with risk. When that technology starts to mature, the banks will come and buy it, right? Because they have to be in that space.
Miriam, is there something, thanks Alex, first of all. Miriam, is there something you want to add on this prospect of how the ecosystem is going to develop?
Yeah, so I think what I agree with Alice, I think many banks will start maybe buying fintechs, could also be because they cannot, I like this word laser pointed services, because I think it is really like this, that the fintechs, they offer really, really special niche services for a special product. But I also think that a lot of banks will move into a kind of, let's say, infrastructure provider, that they really care about the infrastructure, but they won't have so much touch points with the customers in the future. I think that actually you have fintechs in between. This is what I think. It's more like that there is more this three parties that are involved into something. So you have on the one hand the banks providing the infrastructure, on the other hand the customer wanting something, and then in the middle there has to be somebody that is really laser pointing what the usability, what the customer really needs, and builds really good applications for this. This will be the fintechs, in my opinion. So, I mean, yes, there are still banks. I'm not saying that there won't be any banks in 10 years. This is what I don't think. They are still there. Some of them will vanish, because if they don't cooperate. I think it's a lot about collaboration and building bridges with each other. And so there's a lot of cooperation. It's also for banks where, I mean, we are also cooperating with a bank because we don't have a license. They have the license. They have everything in house. Whereas, but we have, let's say, we built a technology where we care, let's say, on the data protection, everything by ourselves as well. So, and the bank is the infrastructure provider in our case. And I see this in many cases of embedded financial services, that the role is changing of banks. So as Bill Gates said, we had this nice phrase. I mean, everybody knows it. Banking is necessary. Banks are not. So this is, I don't agree that they are not necessary at all, because not in the context of banking. Banking can be done without banks, but actually they need to be somewhere there and to provide the infrastructure. And maybe what's also interesting, actually, the Solaris Bank is a big, I don't know if you know them, Alex, but here in Germany, they're very big FinTech. They brought out a research a couple of weeks ago where they ask a lot of, let's say, retailers and e-commerce marketplaces and customers. And they actually said in Germany, 61% of the people in Germany would go to Amazon or DM Markt or to Lidl in order to open up a bank account. So that was quite amazing.
I think this is really interesting, and what I'm very curious about it. I mean, just right at this moment, we're just thinking and anticipating, but how this change will gradually evolve until it really takes off. And of course, I also think there is an important role of banks still in the future. And as you pointed out, it's all about cooperation. But maybe if we, I don't know, try to fast forward 5 years, maybe 6 or 7 years. So do you actually think, I don't know, I would no longer go to a bank, but I just would go to my car dealer, would go to someone who sells me a house or whatever, and actually everything linked to banking will be done just there, or will there still be some banking experience? What is your view, or maybe final statement? What's embedded finance gonna be like in 5 years? Maybe starting with you, Miriam.
I think it's the future of banking. I mean, I have a 16-year-old daughter. She has never stepped into a bank in her whole life. So I don't know if she wants to step into a bank, but she uses all kinds of, let's say, social media and applications.
Thanks, Miriam.
What I would say is that if you look at the opportunity for financial services, like the kind of the potential for financial services and the actual financial services that are sold today, there is probably a 2 to 3-fold increase in the opportunity in the market. You know, banks sell to who they sell, but there are many selling opportunities where consumers and other customers would love to buy the financial service because it makes their life better, it makes them more wealthy, but there just isn't the channel to sell it. So I think, you know, there will still be, like anything that has been established for a long time, it will take a long time to do the half-life, you know, and to die. But what we'll start to see is that the economics will be in favor of who creates more value. And I think over the sort of span of the next 5 years, we will see a much bigger financial services market, and a big chunk of that, some of it will replace traditional banking, but some of it, you know, quite a chunk of it will be actually new forms of banking that would never have been sold previously because there wouldn't have been the opportunities and the channels to sell it.
So I think this is a really interesting prospect. It's still hard to grasp, but I think that it's so important that we take a deep dive at this very early stage, and maybe just to link back to what Miriam just said, quoting numbers from the Solaris Bank. We had this morning. We just published our digital finance study 2021, and we had similar findings. And I think, and this is so interesting, as we started this discussion, what does the customer want? And if the customer already tells us he is ready for X and Y, I think that's the invitation for the entire ecosystem to just work on what the customer needs. Dear Miriam, dear Alex, thank you so much for taking your time. I hope you enjoyed our session, and I'm pretty sure we're gonna have a similar one in a couple of years ago, and I think then we can think back of what we thought today. I think this would be interesting. On that note, thanks for taking your time, and I hope you will tune into one or other session of our Digital Finance Conference today and tomorrow.
Thank you very much.
Thank you, Kevin.